watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the market strategies you need to follow for this fresh and new week and a new day as well. The Nifty is already sitting on a 2-day of an up move. The recovery that we have seen after a long haul of sell-off has largely been drawn by the banking stocks. Remember, even on Friday, we've seen the last hour recovery on the IT names as well, right ahead of the earnings season. That begins this Thursday for the Nifty 50 companies as well. So both the banking as well as the IT stocks will be in focus again in trade today. Indian equities are poised for a muted start as we have been looking at mixed global cues for the Friday's trading session overnight for Wall Street as well as today's global setup as far as the Asian markets are concerned. Remember, besides this, we have to keep an eye out on the foreign portfolio investors that have sold already $2.7 billion of Indian equities in September. This is a third consecutive month of outflows from the FPIs and has set 2025 on track for a record foreign selling as well. So we do have all of this set up that the markets will be reacting to. On Friday night, Wall Street ended mixed. Investors were looking past the shutdown concerns in the US government, with lawmakers again failing to agree on funding to keep the government open. The shutdown also was postponed. The key economic releases were postponed, including the September jobs report that had been slated for Friday as well. At close, we did see S&P 500 was just flat with a bias on the upward side. Dow Jones was up by 0.5%, while the Nasdaq was down by 0.3%. This morning, we've been seeing that Nikkei has surged by more than 4% to a record high level after the ruling Liberal Democratic Party has chosen staunch conservative name Sane Takaichi as its new leader on Saturday, paving the way for her to become Japan's first female prime minister. Now remember, markets in China and South Korea were shut for holidays, so we don't have cues from that. And the next level for the Nifty, for all of you to watch out, will be 25,017. Why is this? Because this is a 50% retracement of the fall seen from September 18 high of 25,448 to the September 30th low of 24,587. So that level will be important to watch out for. What will be of importance today? Watch out for the banking related stocks. HDFC Bank, Bank of Baroda, Kotak Bank, IndusInd Bank. All of them will be reacting to the business updates. Also reacting will be Marico. Today is also the day when India's biggest IPO of 2025, Tata Capital, opens for subscription. So that will be a big, advantage point for all the IPO investors to look at as well. So keep that in focus too. Apart from this, let's also look at what's happening on the brokerage houses front. On HDFC Bank, Nomura has given a buy call, a target price of 1,095 on the business update. By saying that the bank has reported strong gross loans growth of 4.4% sequentially after adjusting the loan sell downs, signaling robust credit momentum. Also, domestic deposit growth has remained soft at 1.4% sequentially, with a CASA ratio stable at 33.9%. We also have a Nomura report on Kotak Mahindra Bank. They have a neutral call there, a target price of 2,150 per share. They believe the net advances have risen by 15.8% year on year and 4% sequentially. Average advances have grown by 14.6% year on year. Total deposits have grown by 14.6% year on year and 3.1% sequentially. CASA deposits have grown by 11.2% and 6.7% sequentially again. That will be also in focus. Apart from the banking related stocks that we will focus on a bit, remember the shares of Vodafone Idea will be in focus as the Supreme Court is set to deliver its verdict on the company's plea regarding additional adjusted gross revenues or the AGR dues. The top court had previously set a new hearing date twice in the past month before finalizing the judgment. Vodafone Idea has challenged the Department of Telecom's demand of 9,450 crores, arguing it has exceeded the scope of court's earlier ruling on AGR liabilities. From the media and entertainment space, keep an eye out on PBR Inox today. Investec has come out with a report, a hold call, a target price of 1,215. The company is expected to benefit from strong FY26 box office growth. H1 revenue growth is estimated at 18.8% year on year. Q2 performance is expected to be strong despite the underperformance from some of the large titles. Operating leverage and cost control initiatives are driving the profitability, so keep that in focus as well. Apart from the main markets, we'll also be keeping an eye out on the commodity space. Remember, gold prices again hitting a new high of $3,900 an ounce on the global level. Gold prices are up 50% in the year 2025. Remember, prolonged US government shutdown and the Federal Reserve's official speeches last week have all led to further up move on gold prices on the international level. Silver has surged above $48 an ounce as well. Silver is up 67% in 2025. It has posted 7 weekly gains. Markets have priced in 100% probability of a US rate cut in October, and that's what is leading to some move on the higher side as well. Let's actually now look at how some of the markets are moving. And we also have our guest with us, Kush Godasara, Managing Partner, Invest Value, is now joining in. Hi, Kush, warm welcome. Good morning to you and good to have you with us. First up, tell us what's exactly your thought on the markets as we start off another week on the back of some sharp sell-off that we had been witnessing for the last couple of weeks as well. How would you look at the markets?
Good morning, Sakshi. I think markets are. I'm approaching markets with a view of cautious for this week, because as we have seen in last week, there is a shutdown in U.S. government services. Valuations at which U.S. stocks or global stocks are trading at are very stretched. If you look at the data in U.S. itself, even funds are shifting money from US stocks to corporate bonds. So somehow I feel this rally in global markets is stretched with liquidity driven momentum. I don't think valuations are giving a justification to the stock prices in US. So I will be approaching US global markets as a cautious view. Same goes with Indian markets. Definitely, we have seen a good bounce back last week, but trading about 25,250, it's a crucial resistance point on technical charts. And again, the buzz about auto sales number due to GST and everything has fizzled out. I think we need some good news. Maybe the tariff is the only good news which we can receive in our Indian markets, because even rate cut has been done. So I think we should view this week as a cautious. October months are generally cautious, so don't be in a hurry to just chip in all your savings for trading. Wait for a couple of days and then we can take a call based on the technical setup which comes in next 2 weeks or 2 days.
Okay. So the muted market setup, 24,943 is what we are given to understand as far as the Nifty is concerned. The Sensex could be opening likely lower as well in trade. Let's see how things open up in trade. And, of course, we'll be looking at a lot of these banking names. Kush, how would you be looking at the banking names today? HDFC, the likes of IndusInd Bank, Bank of Baroda. A lot of these banks will be in focus because of the business updates that they have been sharing. What's your thought there?
Definitely, I think banking stocks were the one which were leading the markets on Friday. So definitely they are in focus. If they are opening a little bit gap up, I would suggest to book profits. I think this business updates are already discounted in the recent rally of in PSU banks. So on PSU banks, my view is book profits on every rise. Maybe we won't short sell the stocks, but at least book profits in PSU banks. Whereas in private sector banks, I think they have been underperforming since quite some time. So I'm just waiting for follow buying. So I won't uh, go long in first 15 minutes. I will let market settle down, and then at 9:30 maybe we can take a call on private sector banks. But on PSU banks, definitely book profits.
Okay, PSU banks book profits, private sector banks hold on for the first 15 minutes, then take a call. Some more business updates that have actually come in are from Jubilant Food. The Q2 update says that the consolidated revenue from operations is up 19.7% year on year at 2,340 odd crores. Domino's India, like for like growth of 9.1% is what they've posted. Domino's India has opened 81 new stores, ending the quarter with 2,321 stores now. That's the business update that's coming. So keep an eye out on the QSR space, the quick service restaurant space as well. Apart from this, keep an eye out on Aditya Birla Lifestyle. Why is this stock in focus? A large trade deal has taken place. 7.24 crore shares, that's 5.93% of an equity, has exchanged hands during the block deal window. So keep that stock in focus as well. That will be also reacting to the move right now. To 9.7% of an uptick is what we can expect to see as the markets are about to open about from 10 minutes from now. So it's already indicating a sharp up move of 9.8% in the trade today as well. So keep that in also focus in today's trading session. Kush, are you also looking at the primary market? Tata Capital IPO, the largest IPO of 2025 opens today. What's your thought? What are you telling clients?
Definitely, this is at very much discounted what it was trading on, unlisted space. So definitely, I'm recommending retail investors to, apply for the IPO. I think, at least, if not listing in next 6 months, you can look at something around 680 to 700 on the Tata Capital. So definitely, I have recommended all my clients to apply for Tata Capital IPO. Even for long term, I think the group company is very strong. So I believe investors will make wealth, if not profits in short term. So definitely, if you want to create some wealth for your long term portfolio, you should apply for Tata Capital IPO at current prices.
Okay, got that. So there is a vote of confidence coming in from Kush for Tata Capital IPO for long-term investors. Remember, this is the biggest issue of 2025 of the size of 15,511 odd crores since Hyundai Motors IPO that came in at 27,859 crores. This is the next biggest one that has actually come in and the largest one of 2025. This offer includes a fresh issue and an offer for sale, both giving retail and institutional investors to own a piece of Tata Group's financial powerhouse as well. Price band is 310 to 326 rupees per share. IPO date is between today and October 8 for 3 days. It will be open. The grey market premium still indicating just about a 2% upside, but we'll see how things happen. IPO allotment will be done on October 9 and the listing date is October 13. So keep these factors in mind as you go along and look at this as an opportunity throughout the course of the day. We will also continue to get you all the market experts' views on Tata Capital IPO and how are they assessing this biggest IPO as an opportunity for investors at large as well. Let's also now focus on what's happening when it comes to the biggest overhang that stock markets have been facing for months now, and that's with regards to what's happening on the tariff policies in the US as well. Now, reacting to all of this, we have seen that at the fourth Kautilya Economic Conclave, our External Affairs Minister, Dr. S. Shankar, has said that we have issues with the US today, mainly that have not yet reached we have not yet reached a landing ground with our trade discussions. Let's actually listen in to what Mr. S. Shankar has said.
Yes, we have today issues with the United States. A big part of it is the fact that we have not arrived at a landing ground for our trade discussions. And the inability so far to reach there has led to a certain tariff being levied on India. In addition, there is a second tariff, which we have said, we publicly said, we regard it as very unfair, which has picked on us for sourcing energy from Russia, when of course there are other countries who have done so, including countries who right now have a far more antagonistic relationship with Russia than we do. So I don't want, I'm not minimizing the issues, but I don't think we should take it to a point as though this is going to percolate to every dimension of the relationship and there is something very fundamental at stake there. I think we need to see this in proportion.
Okay, Kush, you've heard the minister out, who's clearly mentioned that, we have issues with the US, and that's with regards to that we have not yet reached a landing ground when it comes to the trade talks thus far. We have seen multiple rounds of negotiations, yet the red lines have been drawn by both sides. There are some non-negotiables for us and there are some non-negotiables for them, and which is why we have not been able to progress. This is despite the fact that our own commerce minister has been again visiting the US to resolve whatever gaps that there have been. There have been multiple levels of talks, but not on the negotiating table as of yet in the last 1 month as well. And now, of course, we continue to remain with our stance that India is being unfairly targeted by the US, especially because we are buying Russian oil. And this, they feel, is not a ground that India should be really looked at for imposing higher tariffs, since there are other countries also that have been imposed with lower tariffs and they continue a trade with Russia as well. So, why is India being unfairly targeted? How would you be looking at all of this overhang that still remains, on an uncertain ground as of now?
Definitely, I think India is taking the right stance. I mean, US cannot pressurize us for how to trade globally with other countries. I mean, if Trump is doing what is beneficial for his own country, same way we are doing what is beneficial for our country. If we get a good deal in oil because from Russia, then why not import from Russia? Because we import almost 80 to 85% of the energy consumption we have, and that is the biggest. Pain in our import bill. So definitely, a small discount or a good deal in oil segment would impact and benefit many Indians. I mean, many common men. So definitely, I think it's a right stance that India is looking at, and definitely we should not compromise on even imports of dairy products and agri products, which I feel Trump and US might be pressurizing us because still 50 to 60% of Indian population is dependent on agriculture and dairy products. So I think we are doing the right thing. We India and US should negotiate the midway out. It shouldn't be only one way. So it will take some time, of course, to reach a landing point, as Sir mentioned. So definitely, it is going to be tough time ahead. But yes, we should not, step back from our stance.
Okay, got that. Let me now just look at how the markets have settled, viewers. As far as the pre-open trade is concerned, private banks, you're looking at a 0.4% of an uptick at this point in time. Nifty mildly higher at 24,916, just about a 22 point of an uptick. Let's also look at the Nifty Bank overall, about half odd percent higher, 55,834. Let's also pull up the IT index, flat with a positive bias. Keep that in mind. Remember, Thursday onwards is when the earnings season kickstarts, and we will have to keep an eye out on how the IT earnings pan out for this. Quarter as well. Pharma is on the back foot, is what we are given to understand, at least for now, at this point in time. So that's largely how some of the sentiment is panning out. PSU banks 0.3% up, continuing with their upward trajectory. But Kush has already indicated now is the time to start looking at booking some profits there. So we will be looking at all of these factors and how some of these sectors continue to react as well. Kush, any suggestion on any stocks from across the board that you believe still have a potential to continue to drive up?
I mean, definitely FMG stocks is what I'm looking at because they have been underperforming since quite some months. But every Monday it's better to wait for first 15 minutes because many news have flowed in over weekend, and how we react to it is indicated in first 15 minutes. So if at all you want to trade on the long side, keep focus on FMC stocks. Let the market settle down for first 15 minutes, and maybe we can take a long position on FMC stocks. I think October is a month of festives. Just had Durga Puja and Navratri, so FMCG would have got a good boost. So I believe October will also see a good sales. So FMCG is on focus, and something ancillary to FMCG, quick e-commerce like Swiggy and Eternal should also be in focus.
Okay, got that. We'll definitely keep an eye out on that. Let me also highlight some of the more updates that are coming in from the banking space. We have Bank of Maharashtra, where the advances have grown 16.8% to now 2.5 lakh crore rupees. This is on a year-on-year basis that the advances have risen by 16.87% for Bank of Maharashtra. Keep that in also focus. Deposits have grown by about 12 odd percent there, now coming in at 3.09 lakh crore rupees for the bank too. So that's another one that you can definitely keep an eye out on. This one as well. Let me also look at some of the other HDFC Bank will be in focus. Remember, total deposits have risen again by 12% there. Advances have grown by 9.9%. Kotak Mahindra Bank of 15.8% advances growth has been seen. Deposits growing by 14.6%. Keep that in focus as well. Again, now we are seeing Aditya Birla Lifestyle settle by 5.5% higher. Large trail deal on the block window. L&T Finance will be in focus. Remember, disbursements are up by 25% year on year. Retail loan book has grown by 17% for that one. Keep an eye out on that too. We'll also look at IEX from the exchange of electricity. The Q2 electricity traded volume is also up by 16.1% year on year. That's another one that will be reacting to its business updates. Let's quickly look at how the markets are shaping up. 9:15 right now, and we'll see how the markets are actually reacting in trades. The Nifty first on your screens, 24,907 viewers. We are seeing a mild uptick on the positive side for the Nifty 50. Let's also pull up the Nifty Bank and see how that's also opening up on a positive note right now, 0.4% higher. It's definitely outperforming the Nifty at this stage. Nifty mid caps 2/10% higher in trade at this point in time. Small caps up by 2/10% as well. So the broader markets are also ticking higher. IT stocks also 2/10% of an uptick can be seen. You can actually see advances now on the positive side. 1277 advances to 548 declines. That clearly goes on to show that the market breadth is on the positive side when we look at the first opening tick in the markets right now across the board. When we look at several other pockets, like let's look at the Nifty gainers for this point in time and the sectoral movers and gainers as well. PSU banks, capital markets, Nifty Bank, IT, financials, and capital goods index. They're all up and about in trade within the first couple of minutes that we are seeing into the markets as well. Large caps sectors like banks and IT, and beyond that, we are also looking at financial sector, capital goods, capital market related stocks as well that are higher. But what's down? Autos are down, pharma is down, FMCG is down. You have the defense index and the energy index that's also lagging a tad bit lower in trade. These are the sectoral losers at this point in time. Which are the Nifty movers in trade at this point? Well, you have a Max Healthcare that's higher. In trade by 2.8%, Apollo Hospitals, Shriram Finance, HDFC Bank, Bajaj Finance, Tata Consumer Products, anywhere between half odd to 1.5% odd kind of moves can be seen on this one. Aditya Birla Lifestyle 9% higher at 148 can be seen on the stock as we have been looking at this large trade deal take place on that one. Bajaj Finance up by 1.2%. That's also on a higher note. HDFC, Kotak, UCO Bank among the positive movers from the banking names on the keys business updates that have been coming in. But you can see some pharma stocks like Lupin that are down in trade. Fortis Healthcare, however, is up by 3% at 1010 odd levels. So strong move there as far as Fortis Healthcare is concerned. And we've already marked out Bajaj Finance for all our viewers. Kush, coming to you. How are you looking at the opening?
Yes, opening is very much confusing because, as you rightly mentioned, banking stocks are holding high, auto stocks, FMCG are holding a little bit lower. So yes, I mean there is momentum sector specific. So for trading perspective, we should be sector specific. I believe banking stocks and NBFC should be in focus if they can sustain the rally for first 15 minutes. Maybe high beta traders can look at something like Bajaj Twins or maybe IndusInd Bank. But if you want to short, then maybe auto stocks are looking good to short. Eicher Motors and TVS are two stocks which can give a good profit booking on technical terms. So my focus for longs are on NBFC and for shorts on autos. And if you are a low beta player, of course FMC is where you can invest for next 1 month. So focus on these three sectors. Let us settle down for first 15 minutes, but these three sectors should be in focus depending on your risk appetite.
Okay, got that. I hope this has also garnered some, your understanding of the entire space there. Aditya Birla Lifestyle, after this 9% move, how would you look at this one, large block deal window, and how we have seen the stock move up in trade today? How would you look at it, Kush?
Definitely, again, this sector has a good momentum, good sales in this October month or near Diwali. So I'm looking at this momentum should continue. Aditya Birla Lifestyle may still see some upside in coming few sessions. 168 is my first target. Now you can keep a trailing stop loss at 145. Fresh entry is not recommended for short-term investors because it would be a high risk trade. But yes, definitely, if you are already holding it, hold it with a trailing stop loss of 145. First target 168, and then we can review it again and give further targets for the upside.
Within the mid caps, we are looking at some internet based stocks that are moving up, Nika and Delivery, that's higher in trade. You can look at both these stocks. Any suggestion on the tech space stocks, Kush, Delivery, Nika? Are you looking at them positively?
Yes, maybe Nika is not something I would be interested in trading for a long term or a short term. I believe this stock is not still in a good momentum. If you look at the weekly charts, stock is not able to sustain on the upside momentum. So for Nika, if we speak about the stock level specific, 250 is something where we could find resistance because that was a level which in the month of 2000 in the year of 2023 we had resisted multiple times. So if you have already gone long on Nika, 250 is where you can book profits. Delivery, yes, they are changing and they're expanding their service line. I mean, they are starting with local instant courier support. This may give some boost to their top line, but it will take some time to turn around. We already see a good rally from 250 to 415 just a couple of months. So long-term investors can hold on Delivery. Short-term traders book profits on Delivery. We may see some technical corrections to 400, and that is where we can go long again for a target of 650. So Delivery, I'm positive for long-term, but we may see some technical profit movement.
Okay, let's also focus on the bank nifty yet again. A 300 point of a move on the higher side is what you're looking at right now on this one. Any suggestion on the bank nifty on how to trade this one? You already indicated in the pre-open trade that PSU banks is what you would recommend to profit book, but the nifty bank you will still take it slow and will wait for the first 15 minutes. It's only about 7 minutes that's taken place, but this index has moved up 300 points or so, and then we are seeing a slight profit taking also from that peak. How are you looking at it right now?
Definitely, if you look at first 7 minutes, Nifty is not able to sustain on the higher levels, opening levels, while Bank Nifty is still holding on to opening levels. So, I believe now all the eyes are on banking stocks and financials. If they don't sustain, we may see some correction. So, 56,000 Nifty bank spot level is my resistance level above which I would recommend to go long. So, 56,000 on Nifty bank, that is what you should look for.
Okay, let's also look at some of the other stocks that are buzzing in trade, viewers. From the defense space also, we are looking at an HAL that's also moving up towards the day's high level now at 4,884 odd levels that can be seen. So that's the one that's also pulling up in trade. Keep that in mind, viewers. From the defense pack that we are looking at, along a strong move on that front too. Let me also pull up some of the other stocks that you could be definitely keeping an eye out on. From the banking space, IndusInd Bank has slipped lower, but from the Bank Nifty, you remember out of the 12 stocks, at least 10 of them are up in trade. L&T Finance is also slightly lower in trade. From the real estate space, Sobha is in focus. Q2 update impact can be seen here too, 1.8% higher. That's been seen as far as Sobha Developers is concerned from the real estate pack. Keep that stock also in focus at this point in time. Let me actually look at some of the other key spaces. Let me look at commodities. I want to talk about especially Kush, with you as far as the commodities are concerned. Across the board, the commodities have been moving up. Talk about gold, silver, precious metals, look at copper, how all of them have been moving. What's that doing with the stock market moves at this point in time? Are you tapping that through any equity related moves?
Maybe I'm focusing on copper and silver. I think those two metals could see some good rally. Still, there is some fizz left in copper. So, if you are looking to trade, copper is a metal that you should trade. I believe 1060 is my target on copper. And silver long-term bull run has just been started. So, buy on dips, not at current levels. Gold, I think we are in the overbought zone, so we will see technical correction of 3 to 4%.
Okay, got that. Got that, Kush. Let's also welcome Prashant Tapsi, who's joining in from Meta Equities now to share with us his views on the markets. Prashant, welcome. Good morning to you. How are you looking at markets vis-a-vis commodities, and what's taking your attention in this fresh and new week now after the Navratri and the Shera festivities are all behind us? What's going to take your attention?
I think equities should continue to make some attentions because we are almost entering into the earning seasons, and a lot of Q2 business updates are keeping the stocks as well as the sector very much in action. If you see all the PSU banks or the private banks which have declared their Q2 updates last weekend are doing better, and so that will be the one reason why markets are trading on a very positive zone. Overall, the sentiments and the undertone is turning to be very positive, and the after effects of the GST 2.0 and the way how consumers are spending and the way how markets are reacting to that would be creating a lot of positivity in the action. I think 25,000 can be a very near-term target for Nifty to see the positivity in the market.
Okay. Between Nifty and Nifty Bank, Prashant, what's taking your attention today? The Nifty Bank has soared another 300 points higher in the initial trade itself. A lot of business updates are keeping even large private sector banks in focus, like HDFC is in focus, IndusInd Bank is in focus. From PSUs, we have Bank of Baroda, Bank of Maharashtra in focus as well because of the business updates coming in. So, how are you looking at between the two indices, and what's your thought on the large private sector banks?
I think the Bankex would be the focus stock or the sector right now because the way how the business updates are keeping the sector as well as the stock in very much in action, because banking is one sector where we see some kind of first reaction of the bull run or first reaction of the negative run. So I think when markets are moving very faster, banking X is giving a sentimental hint for the markets are going forward or the short term period. I think markets are going to behave very positivity. In the PSU as well as the private sector, I think PSU will play a lot of positivity game, and the way how Bank of Baroda, Union Bank business updates are being demonstrated last weekend. I think HDFC for me it's a neutral to positive way. Kotak has done a really great in terms of their numbers, but I will see PSU banks will outperform in terms of their Q2 earnings, and that will keep Bankex as well as the sector very much in action.
Okay, fair point. I hope this has also truly helped you out as well. Let me also ask you, this is also the day when we are going to be focusing on the largest IPO of 2025. The wait is over. For everybody who was waiting for Tata Capital, the IPO will open today and will close on October 8th as well. Now, this is the biggest issue of 15,511 odd crore rupees that's coming in. Interested to note that this will be the largest IPO since Hyundai's IPO that came in last year of 27,859 odd crore rupees as well. Tata Capital IPO will give you investors all a fresh issue as well as an offer for sale. At this point in time, the price is attractive 310 to 326 rupees when we compare with what was being traded in the unlisted market. How are you looking at this as an opportunity? Especially, there is a lot of confusion among investors. Should one look at the large pedigree that it belongs to a Tata conglomerate that's coming in? At the same time, it's coming at attractive prices. How would you look at it? Or should one look at historically? The near term memory says look at Tata Technologies. 2 years ago, it came in, it has disappointed investors. So, how should one go ahead and again bet big on a Tata Group IPO that has not performed in the last 2 years? Will Tata Capital really change things for investors this time?
I think at this point of time, the pedigree is not a play for any investors. Right now, the valuation, the earnings, the growth, and the sector, which would be highly focused. So I will be focusing more on the valuation side. I think 3.2, 3.3 price to book valuation is a very, very decent for an NBFC like Tata Capital, which is called among the top five NBFCs in right now in India. The topmost Bajaj Finance is trading at a 6x of its price to book valuation, and this company is coming at a 3.2, 3.3 price to book valuation. So that gives a lot of decent earnings on the tables for new investors to come in. Again, with respect to sectors, I think MBFC is doing really good. I think the way how the RBI has given a lot of liquidity push to the NBFC. So even Bajaj Finance or Shriram Capital or Tata Capital or any other NBFCs can deliver a decent 10-15% growth going forward in the credit space. So I am very much positive as a house of Mehta Equities. We are very bullish on the long-term investment in Tata Capital. If you see the historical return of a Tata Group company, there has been disappointed, but this would be some kind of exceptional in terms of delivering a decent to better return going forward. But obviously, valuation will play a lot of things in this company.
Okay, fair point. Keeping an eye out on India VIX also, viewers, 3.5% higher in trade. So the volatility is also on the positive, also on the higher end at this point in time. So keep an eye out on that as well, since that has been one key factor that has been dragging the sentiments all across last week for the markets. So keep that in mind as well. But Prashant, since we've been talking about the IPO space as well, we have actually seen the largest amount of fundraise in September month. It has turned out to be the biggest, busiest month for IPOs. Every day we've been seeing some of the other IPO that has opened, or the allotment is coming in, or it's getting listed. So there were too much of activity. Investors, found it extremely difficult to keep a tab on it as well. But at the same time, see, we've seen markets underperform, and yet at the same time the IPOs have been looking at record amount of fundraise there. How are you looking at this dichotomy, and how are you advising investors to look at primary versus secondary markets and where the opportunities exist?
See, September is a month where every year we'll see a lot of IPOs because the half year ending, lot of
Okay.
the IPOs will get ended. So the whole push would be on the September to complete the regulations of SEBI. That would be one reason. Second, I think there is an absence of no return being generated in the secondary market where people are not able to make that 5, 10%, 15% return in a very short period of time. So IPOs can be one sector where if the valuations are comfortable, if the liquidity is good. So I think there can be a 10-15% listing in kind of opportunity for investors. So investors, a lot of investors are focusing more on the IPOs because as you rightly said, every day there are 3 to 4 IPOs are opening, closing or listing. So there is a good opportunity, good liquidity which is being pulled out from the secondary market and pushed into primary market. So any allotment will give you a decent 10-15% kind of return. So investors are moving more towards the primary market. So that would be the second reason. Again, I think a lot of companies are utilizing the market momentum, market liquidity as an opportunity to raise funds. Take it a smaller IPO or a biggest IPO like Tata Capital or the upcoming IPO which is LG Electronics. So I think there is an opportunity, there is a a positivity in the investors mindset where the primary market can give you a very neutral, positive 10-15% return, and the push is towards that.
Okay, fair point. Let me also ask you a bit as far as the mid and the small cap sectors are also concerned. This year so far, we've largely seen the large caps drive any sort of a recovery in the markets. Mid and small caps have only had very periodic moves, but not a sustainable one at that. How are you looking at this space in the second half of the financial year? Do you see some sign of a recovery taking shape as far as the mid and small cap names are also concerned? Should this be on investors' radar?
Obviously, yes, but I will be keep on wait and watching for the Q2 earnings update. So that will give us a very
Yeah.
clear idea how H2 will perform better. So H1 in the Q1 session we already seen there was a very marginal improvement in their top line growth, bottom line as well as on the PAT line growth. But again, one has to wait and watch for Q2 earnings. If there is some kind of stability in the margin or some kind of 100-200 basis point improvement in the margin levels, then only H2 can be a better picture for us. Even FIs are wait and watching for an earning momentum to be seen in the Indian sector. So Q2 will give some sense where stability can be a focused on the earnings, but Q3 Q4 will be a focus on earning momentum. So if they should be earning momentum. Otherwise, FIs will not return into Indian markets.
Okay, fair point. Since you're talking about the earnings growth, IT sector will be the first one which will start reporting its earnings starting this Thursday. What are you keeping an eye out on here? What's your expectation of the IT sector performance in this, say, quarter? And any suggestion before the earnings on the specific stocks that you could share?
Again, in the IT space, I will focus more on the mid cap as a story because large cap there is a lot of volatility in terms of their clients, which are majorly focused on the Western countries. The mid cap companies have a little bit of diversified countries in their portfolios. So I think mid cap companies, I think persistence can be one stock which should be focused more on. Tech Mahindra can be second stock one should focus more on. So mid cap IT companies can do better versus the large cap IT companies.
Okay, got that. So mid-cap IT companies can continue their outperformance vis-a-vis the large-cap IT names. Keep that in focus in case you've been looking at an earnings play there, viewers. So keep that thought in mind as well. Apart from this, I also wanted to ask you, since we began by discussing that, large part of festivities of Navratri and Dussehra are behind us, with just a gap of about 15 odd days. Now we will be looking at, the Dhanteras and Diwali kind of festivities to begin very shortly. But what's your sense? We were betting big on the consumption themes right before the festive season because of the big reforms that have taken place on the domestic ground. That's on the GST rationalization. And coupled with the festivities, a lot of traders, industries were looking at a bumper festive season this time around. Of course, we are waiting by to see what kind of a reaction has there been. Initial comments that came in from the auto names, they were pretty encouraging because they were talking about how some of the bookings are record bookings that they have marked out. Deliveries have been record for them in the Navaratri series, and they are also looking at how to look at all this inventory at this point in time. So, auto basket, consumer durables, FMCG, how are you looking at all of these, and even the e-commerce players at large that were being used to buy a lot of these goods in terms of the purchases that took place during the festive season thus far?
I think the auto sector will continue to give some kind of good numbers in terms of month
Hmm.
on month as well as on the earnings momentum. So that would be the one sector where immediate reaction or the benefits of GST 2.0 has been seen and the numbers are showing in everyday basis. So second would be again auto ancillary companies can be a alternative push because of the major auto sector as a bullish momentum. So these two sectors can continue to see some kind of more action because Diwali is again very near to us. So I think the buying decision will continue to be on a positive side. Again, I think the FMCG can be second stock, second sector one should focus more on. But again, there should be wait and watch for a Q2 updates or the month-on-month updates from the larger players like HUL as well as the Maricos and Dabur. But HUL has recently said there can be very neutral to negative growth in terms of volume. So that is keeping some kind of concern for me. Again, life insurance sector should be one focus where in the GST regime there it has attracted a zero tax. So I think there should be a good momentum seen in the life insurance sector where Niva Bupa as well as SBI Life can be two stocks. One should focus more on the volume growth as well as on the good business growth going forward in the sector. So these two sectors I am focusing more on to have a continued momentum due to the GST as well as on the festival move.
Okay, got that. So we'll definitely keep an eye out on this entire space as Prashant has highlighted for all of you viewers. So keep that in mind too. Let's also keep an eye out on what I was marking out initially. Vodafone Idea shares will be in focus. Remember, ahead of the Supreme Court's hearing on 9,450 odd crore rupees AGR dues plea. So keep that stock also in focus. There could be some momentum there. Right now, it was like it opened with a negative move there, but let's see how things move on and pan out already. Some verdict has been deferred by, in the last two hearings. Let's find out whether the verdict will be given today and what exactly will actually come in and how should we look at that one as well. Apart from this, let's also focus on some of the other key sectors and spaces as well. Apart from the ones that we have discussed, Prashant, where else are you keeping your focus in the markets? Any key specific sector or a theme that continues to give you some positive, updates at this point?
I think capital market as a sector can continue to give some kind
Yeah.
of positivity. From last 3 4 days, there are like indexes giving a higher high, higher low kind of trading. So in this again, Nuama can be one stock which can be focused on as a very very short term player. Even they got some approval for AMC as a business model, and even Edelweiss as well as Motilal Oswal can be a stock one should focus on. The way how markets have been volatile in the Q2 earnings session, that is 3 months from last 3 months. So I think that will be bringing a lot of business activities in the capital market as a business opportunity. So I think Motilal Oswal, Nuvama, Edelweiss, these stocks can be highly focused, considering a better than expected Q2 earnings in coming few days.
Okay, we'll definitely keep an eye out on this space as well. What about BSC? The stock has been moving up today after a long haul of consolidation and underperformance. Any thought here on BSC?
I think yes, technically it has given some kind of very short-term trigger for a stock to move towards 2300 as a target before on or before the Q2 earnings. As I said, capital market cricket, obviously this is the mother of all the players who are listed. So BSE trend is very positive, and if BSE is positive, again Angel should also be in the same direction. So BSE and Angel can see some kind of good momentum, as I am bullish on the capital market segment.
Let's talk about the healthcare stocks, which are all in focus. Remember, the top mover that we marked out right when the markets opened up was Max Healthcare. We also have the others that have joined the party. You can see Apollo Hospitals, Max, Global Health, Narayan Health, even Yatharth Hospitals, Fortis, as among all the stocks that are moving up. But what's the key reason there? Many of these stocks are even up by up to 4% in trade. This is as the government has revised the rates for nearly 2,000 medical procedures under CGHS. CGHS is Central Government Health Services Scheme. Since 2014, this is the first major revamp of Central Government Health Services Scheme as the government has really undertaken, and that has put the spotlight on all the hospital stocks, the healthcare related stocks in focus today. So shares of Apollo went up 2%, Max Healthcare, went up about 3.5%. Yatharth also moved up anywhere between 2.5%. Healthcare Global 3.5%. So these stocks are all in focus today. Now, many hospitals earlier had an exposure to CGHS, had often used to refuse to provide cashless treatment, forcing patients to pay from their own pocket. Later on, wait for months, to get a reimbursement there. Now, according to the hospitals, these CGHS packages were in place. They were outdated and did not account for medical inflation since 2014. Now, this is the first revamp since 2014 that will now create a multi-dimensional rate structure based on 4 different parameters. So rationalization has been done based on accreditation, hospital type, city classification, ward entitlement, and we have also been seen that the as an impact, the move will have a positive one, that the receivables are in a better state compared to earlier. According to a report by Dam Capital, also preliminary review suggests average hike between 25 to 30% across key procedures will be seen, and that is likely to again, benefit the patients at large. How would you look at this new revamp that we are seeing of CGHS, and what does that mean for the hospital-related stocks now, Prashant?
Very positive. I think government has taken a step which was due from last 10 years. That is creating a lot of bottom line impact for the hospitals like Fortis as well as Apollo or any other smaller hospital stocks. But one should focus more on the private sector, because the way how these seasons are changing, there are a lot of health issues going occurred. I think there are a lot of news going forward in the market saying that health concerns will rise going forward in a short period of time. So hospital sectors will obviously make good business out of that. Plus this government initiative which will keep some kind of EPS or a bottom lucrative in terms of increasing their margins. So I think in this space, Apollo Hospital is one of my favorite pick. One should focus more on this with a target of at least 8,000 to 8,100 for a short period of time.
Okay, fair point. We'll definitely keep an eye out on that too. Let me also highlight for all our viewers. Let's look at DMart from the retail space. Why is that in focus? The stock is down, and that's largely on account of a lot of brokerage houses coming up with the report, largely on the negative side for this one. JP Morgan has given a neutral rating to Avenue Supermart. A target price of 4,350, however, continues. For them, the Q2 revenue growth is up by 15%, but it may weigh on the near-term stock price performance, they believe. Revenue versus the street is 2% below expectations, although store expansion pace continues to be steady. Goldman Sachs on Avenue Supermarts has maintained a sell rating with a target price of 3,370. Remember, their earlier target was 3,450. They believe the weaker than expected sales growth is leading to their sell call and a lower target price. A standalone 15.4% year-on-year store growth is no meaningful acceleration yet. They also believe FY26 sales growth is revised to 18% from 20% earlier, and the EPS estimates have been cut by 2%. Citi on Avenue Supermarts has a sell rating, a target price of 3,300 on the stock now. They believe Q2 is a complete miss on revenue growth. Margin risks continue to remain ahead. Competitive pressure from quick commerce continues to remain. There is a weak demand, and smaller town store additions are impacting the throughput as well. on a year-on-year EBITDA margin decline of in 11 of the last 12 quarters is also being weighing on the sentiments as far as Avenue Supermarts is concerned. Let's try and understand what's happening. Now, Prashant, if you remember, probably 5 years or 10 years back, this stock used to be one of the top favorites of all the analysts. Retail investors would have a big chunk of this stock in their portfolio, looking at a stellar business model. And then comes the entry of quick commerce and how they have forayed into all our lives. Avenue Supermarts, even though it's sitting on a massive pool of cash right now, it hasn't yet forayed into the quick commerce space. There must be something which is in the thought process of a stalwart like Mr. Radhakrishna Dawani, who heads Avenue Supermarts at large. But at this point in time, from the last 1 year or so, there has been a complete miss on the stock price performance. What would you say?
Obviously, right. The way other margins are getting under pressure due to the new age business model like Zepto and any other service players, it is keeping some kind of alert for a player like DMart, which is almost going very faster. The business model still looks very strong, but the margin pressure will continue because customer needs such kind of quick 10-15 minutes kind of delivery where DMart is missing out of that. Again, if I see as an example, again Zepto average billing would be around 1000 or 2000 rupees per delivery. But again, if you see Avenues, DMart average billing would be like 8000 to 10,000. So in that case, so still the business model is really strong, but obviously customer concentrations are changing. They need a very faster and easy delivery with lower cost of their buying. So that is keeping some kind of pressure on the Avenue. But again, yes, valuation will see some kind of correction. It is still trading at a 100 PE going forward for next financial year. Considering the valuation, considering the pressure in the margin, obviously there can be a good cut in terms of the EPS going forward, and even the targets can come down. So my target would be again below 4000 can be a short-term target for DMart, considering the pressure in the earnings.
Okay, fair point. 946 viewers. We'll, Prashant, now move to understanding some of the key stock ideas that you can divulge after the first half an hour of trade has already panned out. For investors who still want to trade in this market, how would you advise them where to keep their focus and top choice of stocks for you?
I think again, Eternal can be a one stock one should focus more on. I think the average daily deliverables have keep on increasing like 5 to 6% on everyday basis. So I think for a trader perspective, 331 can be a good level to start as a trading opportunity with a target of at least 345 to 358. So this can be two targets for a very short period of time. Again, in the capital markets, again, Nuoma can be a stock one should focus more on. I am very much positive on the stock on a trading perspective, and with a target of at least 7,200 can be a near-term target on or before the Q2 earnings. So Zomato as well as Nuoma can be.
Okay, let's continue to keep an eye out on all of these stocks there, Prashant. And thank you so much for being with us on the show and helping all our viewers out identify the points of opportunities and how to look at the markets trade amidst all this volatility that continues to be in the front row at this point in time. Thank you so much for being with us. Appreciate your time with us. Viewers, the markets have moved up to the high point yet again. So there is an attempt again to move up higher for the Nifty. 24,946 is being seen at this point in time. So we are 2/10% higher. Let's look at whether this continues. We have the bank Nifty that's up by 330 odd points at 55,928. So it's the banks that is definitely leading from the front for the markets today. Now you can see a 0.6% of an uptick that's also coming in after the first half an hour of trade. Nifty has crossed over 24,950 and the bank Nifty is trading at 55,919. Let's actually look at how this really pans out in trade, whether this momentum will continue throughout the course of the day or will we see some profit taking right after the initial bout of the momentum as well. Prashant has already highlighted some of the key sectors and stocks that you should be definitely keeping an eye out on and where the opportunities exist. We've also discussed a lot of IPO related opportunity for you by way of Tata Capital. But do stay tuned with us throughout the course of the day as we continue to get you the market insights of what's moving, where should you keep your attention, and how are top market experts really advising their clients to really use any sort of a free cash that you have in your portfolios at this point in time as well. So stay put with us throughout the course. There's a lot more for you to track on Business Today Television. In case you have any questions about the stocks in your portfolio, ask them on 12 o'clock daily calls edition. I'll be back for that. So stay tuned for that too.
Karnataka Chief Minister race is refusing to die down. Despite stern warnings from the Congress High Command and a denial by Chief Minister Siddaramaiah, there is no stop